and it is May 7th, 2025. Uh, how's it
Wednesday.
going? Yeah, it's Wednesday. It's
Nice.
the day of the FOMC meeting, which was a big nothing burger.
Did they cut rates or stay the same?
I think held rates the same.
Yeah. Yeah, there's going to be like a 97 or 98% chance of that, and it looks
Hmm.
like it came through.
Is that
Um,
what Poly Markets had it up?
well, I think well, I don't know what poly. I mean, I
Okay.
would I would imagine if poly market has a market on that, that's what it would have been.
Okay.
But
Where did you come up with the percentage?
um, I'm trying to remember. It's probably Benjamin Cohen.
Okay.
He mentions it whenever there's an FOMC meeting. He kind of mentions it in one of his videos, like beforehand.
Got it.
And I think there's some like Wall Street survey or something that determines that percentage chance, and
Okay.
it's always right. It's
Gotcha.
usually
There's
like sometimes it's usually it's like 97% chance of this, 2% chance of that. Once in a while, that's what it usually is, and it's always the whatever's 97% is always comes through 97% of the time.
right.
But it's once in a while it's like 50-50, right? Like once in a while it'll be like 52% chance of a rate cut, 47% chance that it stays the same. Like sometimes it's crazy. Sometimes it's like 30% this, 40% that, 25% of this. But usually it's like pretty straightforward.
Cool.
Yeah. So today so Jack, you don't own any gold.
No, sir.
And that inspired me. And you said the reason you don't own gold is because the opportunity cost. Every dollar that you put in gold could have been a dollar that you put in Bitcoin.
Right.
And I agree with that. That's accurate. Yes. Now, I own gold and Bitcoin, and every dollar that I put in gold, I could have put in Bitcoin instead.
Sure. You find a reason to invest into gold even though you could invest it into Bitcoin,
Yes.
whereas I do not. That's the nuts and bolts of it. And the
Right.
reason I do not is because I look at them as similar assets.
I do too.
And and so when I'm considering them as similar assets, I look at which one I believe to be the better of the two. Like I think this is just normal human behavior.
Right.
And then I make an assessment based on whatever education, knowledge, you know, advice I decide to listen to, etc. Uh, and I make a decision on which one of those I find to be a better asset.
Right.
Um, so because I look at Bitcoin as just gold 2.0, I don't find the need to invest in it.
Okay. Um, so it sounds like you believe that Bitcoin will completely replace the monetary use case of gold. And by monetary, I mean the use of gold as money.
Say that one more time.
Well, okay. I'll preface this by saying gold has use cases that Bitcoin does not, right?
Correct.
Gold,
100%. A hundred
right,
percent. And so as a consumer of those things, that maybe I may look at it differently, but as
right.
an investor,
But gold also, so gold, gold can be used in spacesuits and
pop,
sure,
wiring, yeah. It's a great
sure.
conductor. It's hard to destroy. Like there are physical properties to gold
Yes.
that Bitcoin does not have because it is not physical.
So this is the argument of Peter Schiff here. I'm gonna state Peter Schiff's argument, which I think is false. So Peter Schiff is a famous Bitcoin versus gold arguer,
Yeah, I'm
and
familiar with them.
he says that all of gold's value is derived from its physical use cases. Now, I would argue with that, and I would say some some of a certain percentage of gold's value is from its use cases, physical use cases. And I would argue that also some of gold's value is from its monetary use case. And when I say monetary use case, all I'm saying is gold's use as money.
Got it.
That's what I mean by monetary use case. So gold can be used as an industrial metal, electrical circuit board metal, space material. It can be used for all those things, and it can also be used as money. Bitcoin can only be used as money. However, it does have some other use cases that gold doesn't have. Like you can make inscriptions on Bitcoin. You can memorialize. Even the very first Bitcoin block had a NFT embedded in it. Had the newspaper article headline that Satoshi put in the very first block. Even so, like you know, inscribing like extra business into the Bitcoin blockchain besides just Bitcoin coin movements, transactions, besides just it's had that additional use case, right? Like Satoshi putting the newspaper headline in Bitcoin on the first block, um, right off the bat was that was not a monetary use case, right? Satoshi putting the newspaper headline in that block was not a monetary use case.
No, it just demonstrated another use of blockchain technology.
Yes, it demonstrated another use of Bitcoin. Um, but Bitcoin's main value is money. And I would argue also that throughout history, gold's main use case has been money. Now, gold has also been used as jewelry throughout history. And I would like to argue that everything that has been used as jewelry throughout history was also used as money, such as seashells
I think that's
and glass beads.
yeah, I think that's a wise observation.
Yeah. So like, um, uh, now, so with that kind of playing field that we're on, I think the arguing like the newspaper headline value of Bitcoin and arguing the physical use cases of gold is irrelevant to this discussion. I think the most relevant part of this discussion is the monetary use cases of Bitcoin versus the monetary use cases of gold. Can we agree on that?
I mean, I think that I can tentatively, like, I don't have any, I hadn't thought to need to kind of delineate those things for this conversation. If I come up with a reason why I disagree with that, I'll let you know.
Okay. So and then Peter Schiff goes on. Another thing I disagree with Peter Schiff is he says that because Bitcoin has no use case beyond being money, that it's actually worthless because there is no physical use case. Which also also it's all that's also false because there is use cases for Bitcoin besides monetary use cases, which we've already discussed. There one of them, and there's more being developed. Ordinals. They're putting other pictures and messages in Bitcoin. There's a video game. I think Doom has been programmed into Bitcoin. A simple video game.
Huh,
Um,
interesting.
yeah. So Peter Schiff's wrong about that, and I also think Peter Schiff is wrong that Bitcoin has no value. Um, I think Bitcoin has a lot of value. In fact, the majority of my assets, my net worth, my investments, the majority of it is straight Bitcoin. But there's one thing. So all my life, I'd always heard, don't put all your eggs in one basket. And I never even had a basket until I started investing 5 years ago. And one year into my investing career, no, I'm sorry, 2 years. So the first year, I put all my eggs in the stock basket, and I would have put them all into just Tesla stock, but I decided to have some other stocks to mess around with, some for a short time. But I was only investing in stocks that first year for a year anyway. And I would have done probably best if I had just done straight Tesla, but I did well enough. I think I had some solar stocks as well because I was pretty gung ho about the environment at the time. I don't think I care about the environment anymore. I mean, actually I do. I care about the environment a lot. I'm starting to realize there's not much I can do about it unless I become a politician or wealthy. So I'm trying to become wealthy. Also, becoming a politician is easier once you become wealthy. But anyway, so I'm working on becoming wealthy. Um, in the meantime, um, so if I'm going to become wealthy, I need to invest in good things. So, and I thought Terra Luna was a really good investment because I was new to crypto and it seemed like a cool thing. And luckily, I only put half of my crypto money in Terra Luna, so I only lost and actually I took my money 100% out of stocks. 2020 from March of 2020 to February of 2021, I had 100% of my eggs in stocks, and then from February of 2021 to November of 2022, for about a year and a half, I had 100% of my eggs in crypto. And at the time of the Terra Luna collapse, now I had both Terra and Luna. I had sold a lot of my other crypto for Terra USD stablecoins, which were supposed to be always be equal to $1, but they went to a nickel in a day. And the Luna token for the Terra Luna blockchain had a bunch of that staked, and that went from I don't know $116 to 0.00001 in like a day, and I had it staked
Mm-hmm.
uh,
I remember.
20 or 30-day unstaking period, so that was like dusted. But and I lost 95% of my money that I had in the stablecoin as well, and that was money that I had sold other crypto because I knew the bear market was coming. So I had sold the top on some of my crypto and was storing it in stable coins for safekeeping. But then the stable coin crashed 95%. So I lost 95% of my money anyway. But luckily I only had half my money in that. So I did survive with half my money from that bull run. Um, because I did not have all my eggs in one basket. So sorry, that was a long way of talking about um I don't want to put all my I do see Bitcoin as the best store of value that I know of. But I don't want to store 100% of my value in Bitcoin. I think storing 50% of my value in Bitcoin is plenty. Because as amazing as Bitcoin is not perfect. In fact, Bitcoin has a huge Achilles heel, which is why, which is another reason why uh, I think Bitcoin leaves an opening for gold, and and perhaps something else as well, um, as a store of value. But the Achilles heel is the 3.5 transactions per second, and to go along with that, the 10 minutes of finality per block, 10-minute block time, which ends up being 20 or 30-minute for, or even 60-minute for certain finality. Um, and that's not too big of a problem for Bitcoin as a store of value. And I'm talking more negatively about Bitcoin right now than I'm positively about gold, but I'll switch to that in a minute. But I'll just switch now because I can talk more negatively about it. You asked me what's positive about gold. What's positive about gold is so gold can outpace the transactions per second of Bitcoin. You could have, um, I don't know, 35 money changers lined up, and they could exchange gold if they could do it about um, once every 10 seconds each. and there's 35 of them. Now they're just as fast as Bitcoin. And if there's 35,000 of them throughout the world, now they're 1,000 times faster than Bitcoin as far as transactions per second throughput. Also, the gold time to finality is interesting. So Bitcoin's time to finality is for sure at least a 10-minute block, and usually you want to wait like 2 or 3 blocks to make sure it's for sure set in stone on Bitcoin. So let's call it a 30-minute time to finality where the transaction is never going to be reversed. Now, if you're making a gold transaction in person, you can have time to finality, in 10 seconds. But if you're doing a gold transaction at a distance, it'll be longer, right, than Bitcoin, right? It'll be at least, depending on fire. If you're going across the city, it's still going to be half an hour. If you're going, across the state, it's going to be a day. If you're going across the country, it'll be, a couple days or an expensive plane flight, So, I mean, the fastest you'll ever settle gold across the world is a day on a plane flight. And it's going to cost you more than a Bitcoin transaction, that's for sure. But if you're exchanging gold in person, it doesn't have to, there can be a zero transaction fee if you're dealing peer to peer. If you're dealing with a gold dealer, it'll be, 5 or 10% transaction fee, which is pretty high. But, um, I mean, uh, it's kind of a, oh, sorry, I just bit into something I shouldn't have. Um,
Sorry,
the
I'm just taking notes of the things that you've mentioned that I want to touch on one day.
oh
So,
yes, I look forward to hearing your revolves. But so another thing about gold is that since it has been used as a store of value for 5,000 years, it's more widely acceptable than Bitcoin. Um, so it's much more saleable than Bitcoin is right now. Now that can change. Um, but so I'm trying to say positive things about gold. So gold can be gold can have more transactions per second than Bitcoin. It has the capability to do that. It does in person, at least. It has the also capability of time to finality being faster than Bitcoin, and those are more medium of exchange properties. I would say, as far as store of value properties, I'll admit that Bitcoin's pretty tough to beat there, but the gold store of value property is pretty good. It takes work and money to get to increase the gold supply. You have to pay miners, you have to pay mine equipment, you got to pay the refinery to purify the gold from the ore, and um, so let's see positive things about gold. So gold's been around for 5,000 years, and I forget what the law is, but usually when something's been around for 5,000 years, it'll probably be around for another 5,000 years. So gold's been around for longer than Bitcoin. It's got a stronger reputation. It's got a longer track record of you know being a store value, which is not really fair, but it is what it is. Gold's been around longer. If Bitcoin had been invented 5,000 years ago, it'd probably still be doing just fine, just like gold is. But you know, it's only been proven for 16 years now, which yes, I do agree that's good enough, but not everyone would agree with that. And oh, here's an okay. So there's a little bit of the speed thing where gold is somehow better than Bitcoin on speed, even though gold's been around for 5,000 years. It's still somehow faster than Bitcoin, which was only invented 16 years ago. The other major thing that gold beats Bitcoin on is privacy. Gold is untrackable. You can melt it down, and gold is completely fungible and untraceable and private. Like you can melt gold down, and no one can track where it came from. Gold is an element. You can't. if it's stamped with a serial number and it's stamped with the logo of the refinery it was made at and stamped with a serial number, then you can trace it. But you can take gold that's stamped with a number, you can scratch off the serial number or melt it down, and it's still worth its weight in gold. But now it's not traceable anymore. And you can do that with Bitcoin if you send it through like a mixing service, like not Tornado Cash is for Ethereum, but there's mixing services for Bitcoin. I don't know any of the names of them. I've never used them. But the problem with that is if you run Bitcoin through a mixing service, law enforcement can tell that it's been through the mixing service, right? And so Bitcoin is trackable. If for sure it's trackable if you don't run it through a mixing service, and even if you do run it through a mixing service, it's still trackable that that Bitcoin is from a mixing service, right? So each individual Satoshi is unique. It's not. It's supposed to be fungible, right? Like dollars and gold. Grams of gold, ounces of gold are fungible. They're 1 ounce of gold is just as good as another ounce of gold, assuming the same purity and no serial number and all that. Um, uh, and dollar bill is the same thing as long as there's no special tracking on the specific serial number or anything. It's $1 is the same as another. But with Bitcoin, it is only that it's not quite that way because each Satoshi is trackable, and therefore, you know, a Satoshi with an ordinal NFT on it is more valuable than an ordinary Satoshi, and a Satoshi that's been through a mixer is probably not going to be as acceptable to some people as a normal Satoshi would be. And there's also, Satoshis from North Korea, Lazarus Group hackers are probably also not as valuable as a regular Satoshi would be. So that is another check mark in the gold column, meaning gold is better than Bitcoin because gold is private and Bitcoin is not. And I think I had one more point, but I already forgot what it is. And I've been talking long enough, so I'm gonna pass it over to you, Jack.
Okay. Well, thank you for that. I actually I've learned some new stuff that I didn't know, and I love that that's still the case almost every time we talk. Um, I didn't realize that you could. I mean, it makes sense. I just had never considered that you could see where a Satoshi has traveled. You know what I
Yep,
mean? Like I didn't know that that was a thing. It makes sense though. It's an
that's the whole point
open
of it.
ledger. Yeah, it's the whole
Yeah,
point of Bitcoin. So I guess if you're looking for privacy, then maybe that isn't something that you should be looking for with Bitcoin. And then in that particular case, I suppose that yeah, maybe gold is a better option than Bitcoin. I would probably argue that that would not be better if you're doing shady things and you need to be able to do them privately. Something tells me you'd prefer to not have even a suitcase full of gold bars that you need to move. That would be incredibly cumbersome. It would be very difficult to keep it a secret. Even hell, it's physically hard to lift at that point.
private plane, bro.
A private plane, you say?
Yep.
Well, assuming that you have enough to charter a private plane, right? Just because you have that doesn't mean that you can spend it. Like I don't know of a place that you can pay for a private plane with gold, right?
No,
Perhaps these places exist, and maybe if I'm
no.
the shady type
You
of
take
character
you
that
take
is
some
looking to
for
do
gold.
private stuff,
Right.
perhaps there's a way. I don't know. I don't know of any way to do it personally. I don't know of any way to buy groceries with gold.
No, no, no. And dollars are immediate exchange, right?
Sure, they are. They are. But if we
So
start talking about dollars, then we're talking about how dollars are better than gold. So like
I'm talking about as a store of value, though, right? Like I would take just like I would take my Bitcoin to the exchange to get dollars to buy a private plane. I would take my gold to a gold exchange or a
okay,
gold.
fair enough. So we'll use that example then.
But
You got to
the rest
take
that I'm trying to flee the country with now, it's actually much easier to flee the country with Bitcoin, right?
that's what I'm getting to. You said it's more saleable.
But
I don't know if I agree with that. It's
I,
definitely less portable.
so if I'm let's say I'm trying to
let's say that the government has decided to seize everybody's wealth and
Yeah.
you need to move to a new domicile where your wealth will be protected by the government that you live under rather than stolen by the government that you live under. And you need to move, you know, many, many miles, many, many miles. Are you more likely or less likely to have your gold versus your Bitcoin at the end of that trip?
No, no, Bitcoin for sure.
Yeah.
But the thing, because the Bitcoin is traceable, you cannot move to let's say if you're fleeing the U.S. government, you cannot move to a U.S. government friendly place. If you're doing it with Bitcoin, you can only move to a non-U.S. government friendly place.
Well, I
Where,
feel like that's probably the case if you're trying to leave in anyways, but that's because at that point in time they would be looking for you. So,
yeah,
they're not actually, we're not talking about your wealth anymore. You're talking about your physical being at that point.
yeah.
So, again, for the purposes of this conversation, I don't know if that really matters. Um, when it comes to, yeah, like, are gold transactions immutable? Like, it's a question. It's not, I don't know.
Well,
I know that Bitcoin transactions are final, right? We talked about you mentioned that the Achilles heel of Bitcoin is 3.5 transactions per second and a 10-minute finality.
I mean,
Uh,
gold is susceptible to a wrench attack, but so is Bitcoin.
yeah, I mean maybe. But I feel like it's not as susceptible because it's easier to conceal.
That's
Uh,
true. That is a point for Bitcoin.
and
Yeah.
so I go back to my question of immutability, right? Can a I mean, we know that a Bitcoin transaction is final. Like you fuck up and you lose it forever. So is that the case with gold, right? Like,
I would
can
say it is.
well, I mean, maybe, but like, it depends on how you, I guess, keep your gold, right? Like, if you keep it physically, maybe, but
Yeah.
if you invest in it in another way, I would say probably not.
No, I'm comparing physical gold to on-chain Bitcoin.
Okay.
So I'm not taking into account the Lightning Network, and I'm not taking into account gold, derivatives, and I'm not taking into account Bitcoin derivatives either.
Okay. Okay. So then, yeah, I guess then that means that if you can find a place to go peer to peer with gold, then yeah, I guess it would be immutable then in that particular case.
Yeah,
Like I feel like there's probably plenty of opportunity for overturns and seizures if you're using any kind of infrastructure other than, peer to peer.
of course. And that's another point for Bitcoin is Bitcoin has its own built-in infrastructure,
Right. Right. That
which
again is immutable and can't be overturned.
gold does not have decentralized immutable infrastructure.
Right. So that's kind of what I was getting at with that.
But themselves do have the immutability. Like gold coin
Right.
itself does have immutability.
Right. Right.
Anyway,
You can hand a gold coin to somebody and nobody can, well, maybe they can, but reasonably you can't just overturn that. You can't just pull the rug.
right.
Um, Okay, so you mentioned that there is what did I write? 5% fee on gold.
I was just pulling that out of my butt from
Oh, okay.
I've bought in gold a few times at gold stores, and they usually charge a pretty hefty fee.
Okay. Like I can go to, um, I can go to the grocery store, right down the street from my house right now with my wallet, my cold storage wallet, and I can put Bitcoin into the machine there and get cash for my groceries right on the spot.
They're gonna charge you a good 5 or 10%
It's
too.
it's it's not. It's three. So it's
Oh, okay.
it's not
Very
so
good.
bad really. So that's again where I'm like, oh, you mentioned a five. Okay, you just made up the 5%, so maybe it's not so steep.
Well, from my
Anyways, I guess the point I'm trying to make is that as far as convertibility to a different medium of exchange, I feel like it's easier for me to get my Bitcoin into cash than it is for me to get. It would be, and I don't know because I don't hold gold,
no,
but
I agree. I actually agree with that because there's Bitcoin ATMs everywhere,
right,
Bitcoin exchanges that you can link to your bank account, and you can just push of a button. Whereas with gold, you have to bring the physical gold to a physical gold buyer or seller.
right. Which again, now we're talking OPSEC, especially if we're talking about lots of it.
Yeah,
Um, then we also you also mentioned a point that I wanted to bring up that I feel like is another point for Bitcoin, which is Bitcoin has a fixed supply.
Yep.
versus gold, which is in our lifetime, anyways, always going to be inflationary. Um,
Yep.
and so I feel like in that
So,
regard,
so by the
it,
way, in our lifetime.
right, right, that's correct. But I would argue that most of the Bitcoin supply is in play,
Yes.
whereas
Inflation
we're
rates are,
which we don't really know how much of the gold supply really. I mean, we can do calculations, but you know,
the gold supply generally has an inflation rate of around 1.5 to 2%.
hmm but
And
it
big
is feasibly
majority of,
possible for more of it to be extracted or a technological advance in mining to occur. You know, like I
yeah,
actually, ironically, I move equipment for mining companies. So like I actually look at the machines that are being used for mining operations, and these things are intense.
yeah, but
So, you know, I mean, like they're getting better at pulling it out of the ground, is I guess what I'm trying to say.
which is how they're managing to maintain that 2%,
Hmm
because the total supply of gold
Is
continues to,
growing. Yep.
so 2% of the supply every year is actually like more gold,
hmm
even though it's still 2%, because there's 2% more gold. Now it's
2% is a bigger number. Is a bigger number in totality.
yes,
Yep.
yes,
I understand. Okay, so then, you know, the question, you know, like I keep, you know, and I mean, there's a lot of stuff that I think you mentioned that was good for Bitcoin as well. So I don't have to go back and rehash, you know, stuff that we've already mentioned. I will kind of my last 2 points on the gold versus Bitcoin subject are really kind of a thesis for me and a question I ask others. Will the market cap of Bitcoin eventually catch the market cap of gold? And my thesis is yes. And
yeah. This is
so
interesting.
what's
Go
that?
ahead. No,
Oh, just that if I believe that, then not only are there all these pluses to what Bitcoin is, and whether you know like there are points, point for Bitcoin, point for gold, point for Bitcoin, point for gold. In the end, I believe that the market cap of Bitcoin will at least catch the market cap of gold. And so there's far more upside to holding that asset than there is to holding gold because of that reason. And then finally, you mentioned that you believe that the Achilles heel for Bitcoin is its transaction time and its finality time. But and you know this is about me as well that I don't look at that as a flaw. I look at that uh, as as a feature of the programming, like
right.
working as intended.
Yeah.
And you know, I mean, perhaps, and I entertain the argument in my own mind about whether or not the original vision of Bitcoin is still being utilized. Right? That's kind of where we get into with the, you know, can it be used as a peer-to-peer cash? Right? Can it be used as a daily transaction stuff? And frankly, the answer will be no. Right? And if I, but here again, when we're talking, you know, that's one thing in particular. But when we're talking versus gold, I also don't see gold as becoming the medium of exchange either. So, you know, again, if we're talking apples to apples, I don't know that that finality time and that transaction time really even matter. Um, I don't think anybody's going to be using Satoshis to buy coffee, but then again, I don't think we're going back to gold coins either. So, you know, and I know that you, I think as well, believe that there will be some other medium of exchange that we utilize on a regular basis for peer-to-peer transactions and for buying normal stuff, which is why we invest in altcoins. At least that's why I invest in altcoins at all, is because I believe that that is still yet to be determined. And so, you know, when it comes to this, I believe that the transaction time is intended so that there isn't uh, I guess it doesn't become so burdensome and hard to keep track of the entire history. Right? They want this to be something that can be stored on easy to use and access computers that everybody can have.
Even as it grows, every
Even
block.
yeah, even as it grows for its entire lifetime. And
Yep.
so if you have really big blocks, or you increase the speed of how many blocks get created. Either way, you're increasing the amount of data that needs to be stored, which would inherently reduce the amount of decentralization that's possible from the asset in the first place. So I argue that the decentralization is the one thing that separates truly Bitcoin from every other digital asset. It is completely immutable at this point. Whereas you could argue that every other cryptocurrency, that isn't the case. For a while I started to think maybe Ethereum could be that, but lately I've lost a lot of my faith in Ethereum, which I didn't have a ton of in the first place. So, you know, again, I'll go back to that. I don't look at that as an Achilles heel or a fatal flaw of the thing. I look at it as, it's its own insurance that this thing will stay as spread out and as large in network, because again, we'll go back to the value of its network is the square of its users. So, if that's the case, then we want this thing as spread out as possible so that the value of the network becomes as big as possible. And any change or any increase in the amount of data that we store per block would end up meaning that isn't as possible as it could otherwise be. So, anyways, that's that I look at that as one of its greatest strengths rather than one of its biggest weaknesses. And yeah, I
Well,
think that's most of the stuff that I had
yeah,
wanted to
no,
make sure that I mentioned.
I 100% agree with 99% of what you said.
Awesome.
Um, the 3 points I want to bring up, if I can remember all three of them. One is the market cap issue. Is one. Another other issue I would like to debate is the oh shit, I forgot now.
Maybe it'll come back to you as we're discussing the other point.
Yeah, let's. Well, I mean, I agree with the decentralization, the slow by design, and all that. The Metcalfe's law. Okay, the Metcalfe's law is one thing I want to discuss. So the problem with Bitcoin using Metcalfe's law is that um, Bitcoin becomes maxed out. In fact, Bitcoin's been maxed out since 2017. When I say maxed out, I mean every block is full. And it's not gonna do more transactions per second, even if, more millions of people want to. And it doesn't matter how much they pay for their transaction fee, it's still only going to be 3.5 transactions per second. So, um, some the Moore's law has a cap with Bitcoin because you cannot have um and I should have prepared what 3.5 transactions per second. I think each block can have, I don't know, 1 or 2 thousand transactions or something in it, and there's a block every 10 minutes, right? So um Moore's law is just, oh, the value of the network is equal to the number of people using it squared. Well, the problem is you can have um 1,000 people using the Bitcoin network, and that's fine. And you can have 10,000 people using it, and that's fine. And the network is probably 100 times more valuable with 10 squared is 100. Like 10,000 is 10 times bigger than 1,000. And it's not only 10 times more valuable, I would say at that point, it would be 100 times more valuable. And when there's 100,000 users, it probably still works. Maybe you have to kick in a couple extra cents on the transaction fee or Satoshis or whatever. But it'll probably still work fine and again be 100 times more valuable than it was with 10,000 people using it. And again, with 1 million people using it, now it's for sure maxed out, but you can easily get a transaction through with a reasonable transaction fee of a dollar or two. And it probably is again 100 times more valuable as when there was 100,000 people using it. But you start getting 10 million, 100 million people using it, all of a sudden it starts taking weeks or months for everyone to get a transaction through. and I'm gonna have to go through the exact numbers on it, which is bad of me that I didn't do it now. But these are things that can be looked up with Google or a calculator, or ChatGPT or Grok or whatever. But there comes a point where Moore's law falls apart with Bitcoin specifically because of the throughput gets limited, right? It's like um, a billion people using Bitcoin is not going to be 100 times more valuable than 100 million people using Bitcoin because a billion people can't use Bitcoin unless they want to wait about 3 years for their turn to use it once, right? So, and that that brings me to the point of the peer to peer cash point. So, Bitcoin cannot be used as peer to peer cash for the same reason. Now, yes, it was intended to be peer to peer cash, and it I would argue Bitcoin can, point for Bitcoin, it still can be used as
Yeah,
peer
it
to peer
still can. I can give you
by
Bitcoin.
rich people
What's that?
that by rich people that can afford the transaction fee
Well, there's the transaction fee isn't so high that you can't afford to send
because
somebody
it's
some
not
Bitcoin.
used by a billion people yet,
Right.
and
I
it never will be. It will only be used by a certain number of people, and I don't know if that number is 100,000 or a million or 10 million, but somewhere in that range, Bitcoin tops out, right? And as you add on more people, it's going to add on a higher transaction fee, and some of the poor people at the bottom are going to drop out of Bitcoin, of using it on chain, because there's this, like, for me, I'm not going to use Bitcoin if the transaction fee is $100.
Well, you might.
That's my
You're not going to buy coffee though.
I'm for sure not going to use. No, I mean, I'm not even use it as a store of value. If it's $100 transaction fee, that would be about my
Well,
limit. I would still
well,
use it.
I mean,
If,
you say that, but what if the coin is worth $100 million?
well, yeah, I better have a whole coin then, right?
No,
That's what
you could even have a half a coin. You got $50 million.
I'm saying.
Like you still have enough to pay the $100 transaction fee.
I
And
guess. I guess.
and it would still make sense for you to do that if your investments were paying off. You know what I mean? Like,
Here's what matters. I think it matters the amount of satoshis for the transaction fee compared to the amount of satoshis in my Bitcoin savings account, right? Because if the amount of satoshis required to move my entire life savings of Bitcoin is more than 1% of my Bitcoin, I'm not going to like that. If it's more than 10% of my Bitcoin, I'm really not going to like that, and I probably won't use it. Like, I'll probably wait until I can sneak one in at 5% or 1% and cash it out, right? Because I don't want to be stuck. And what if what if I have such a small amount of Bitcoin? If I have $100, and to your point, right? Um, as the transaction fee goes from $1 to $10, the price of one Bitcoin will probably 10x at the same time.
right.
That's
And
likely.
and
Yeah.
that's my point. Like,
And that's
you're
why
not
you
going to
got,
care about $100 transaction fee when the cost of living is such that you make $100 for an
and
hour's worth of work. Like,
why I say, and Jack, that's why I say Bitcoin is for rich people, right? Because here in America, we can probably acquire enough Bitcoin that it still somewhat makes sense to use on-chain Bitcoin as a savings account for an average American. Where you go to other countries, Mexico, for instance, where the average wage is $10 a day, where people in other countries like Mexico and Turkey, they're making $3,000 to $5,000 a year, right?
sure.
And they got to spend, they got to spend at least half of their income on just housing and food, right? So, like, the amount of money that they have to invest in Bitcoin per year, like, max is going to be $1,000, and probably closer to $100 per year that those people could invest in Bitcoin. And you know what? It's probably not a good idea for those people to invest in on-chain Bitcoin, because they're going to get a significant percentage of their life savings eaten up by transfer fees when they finally decide to spend their Bitcoin.
I disagree. I 100% disagree with that.
I mean, it depends on what they can do, right?
It
If they
depends
can,
on how fast they need to turn around and sell it, right? Like if you're investing in it, you
and how
better
fast they acquire it.
you need just a longer time horizon before that still makes sense to do, right? Like the only
No, I
time the only time you don't do that is if you're trying to trade, right? You're trying to flip it, you're trying to, make a quick buck. And if that's the case, yeah, you're in the wrong. That's not what Bitcoin's for. Like you can do
right,
that, but you have to be really good at. We've talked about this. You have to be great at technical analysis if you want to try to pull that.
right.
So like if when I again we've talked about our definitions of investing, and me specifically, I'm not usually buying anything unless I'm planning on holding it for a year, right? Like because I don't want to pay the short-term capital gains tax.
Right.
So, like for me, I'm like, well, like it's not like even if it's a significant portion of my wealth in the next year, I'm willing to bet that like Bitcoin will go up enough to where it will still have been worth it to pay the transfer fees because I will have made more money in Bitcoin having my money in this asset than I would have in almost any other.
Well,
And maybe than any other, right? So like
Jack,
that.
I agree, and I would like to say that the caveat I used was on chain Bitcoin, right?
Yeah, yeah.
If I was only making $10 a day and I was only saving, you know, $1 to $10 a week, and I was only saving, whatever, $100 a year, would I still want to invest in Bitcoin? Yes, because like you said, yes, it is one of the fastest growing assets. But I would have to invest in off-chain Bitcoin, right? I would have to just keep it on the exchange where I bought it from, probably.
You wouldn't have to.
Now, now
And it
after
would
10
be actually
after
safer if you didn't.
of doing that, right? After doing that for 10 years, where I'm buying, a dollar's worth or $10 worth every day or week or month, and after maybe after 10 years, I would have at least $1,000 or maybe $10,000 of Bitcoin saved up. Then I could put it on chain for
Let's
safekeeping.
let's do the math on that because I wonder what that would end up looking like if we actually did the math on 10 years. Like let's look, I'm not saying we should do that now. We've been talking for quite a while on this, but like
And,
as a thought experiment sometime we really ought to pull up the full history of Bitcoin, and I could probably do it right now actually.
uh,
Let's
and my main argument is that moving Bitcoin on chain as peer to peer cash, that there's a wealthiness threshold where it stops making sense to do that. And I'm not and and I mean a peer to peer cash, not savings, right? It makes sense for everyone to save in Bitcoin, especially if you have a low fee off chain version to start with, until you have a substantial nest egg that you can pay one transaction to put on chain.
can we do the math on whatever. Like if let's say we saved 1,000, let's just do it. We'll do it. You're good at math. You can probably do this in your head. If you were to have put away $100 a year for 10 years, right?
That's $1,000.
That's $1,000. Or you said maybe $1,000 a year. Okay, so let's do that because that'll be more fun. Let's
Well,
let's
yeah,
take $1,000 a year over 10 years
mm-hmm.
that you've been investing in Bitcoin.
10,000.
um, can we do whatever $10,000 times 3,230,884% is?
Well, 3 million% would be um 30,000x, which I think is a little unreasonable from this point. It would be good from
Maybe, but just as an experiment for what, the
well,
possible is.
well, that was probably what Bitcoin's growth was the previous 10 years.
That was the first 10 years.
Right. I think the next 10 years, I mean, Michael Saylor is saying like a 40% cager, which I think would be reasonable. It might even be a little high. I think maybe 30 or 25% might be more reasonable, which is still high, right? Like for a cager, that's pretty good. Like if you have a 40% cager, that means the value of Bitcoin is going to double about every 2 years.
hmm
Like that's pretty fast.
Yep.
And I think
And
for
so
for
you double every what you said 2 years for 10 years, so you double 5 times.
I think it would be reasonable to say that Bitcoin will double in value every 4 years. That would keep Bitcoin subsidy for the block subsidy, that would keep that steady, the dollar value steady, right? Because the Bitcoin value, the Satoshi value of the block subsidy for the miners gets cut in half every 4 years at the halving. And at the same time, if the Bitcoin dollar price doubles every 4 years, then the dollar value of the block subsidy would remain constant, which I think is reasonable because if it doubles every 4 years, that means what's 72 divided by 4?
I'm not the math guy. You're the math guy.
Oh, well, 80 divided by 4 is 20. So 72 divided by 4 would be 18.
18.
That
Yeah.
that would be an 18% CAGR, compound annual growth rate. At an 18% compound annual growth rate, Bitcoin will double in value every 4 years. And I think that's reasonable as a for
And I mean you're taking the low side, right?
yeah,
You got
that's
Sailor on the high side, you on the low side. I'll take right in the middle at 30.
sure. So it if Bitcoin's doubling in value every 4 years, if it at a 30% CAGR, it'll double in value every about 2.5 years.
Right.
Um, but and so let's use 3 1/3 years just to make it 1/3 of 10, right? That's halfway between me and you,
Hmm.
because I'm saying 4 years, you're saying 2.5.
Sure.
Let's call it 3 1/3. If Bitcoin doubles every 3 1/3 years, that means it would double 3 times in 10 years. So right now it's worth 100,000. In 3 1/3 years, it would be worth 200,000. In another 3 1/3 years, it'd be worth 400,000. And in another 3.5 years, the end of 10 years, it would be worth 800,000, right?
Hmm.
And if you have 10,000 to invest over the course of 10 years, the math gets complicated. So let's just say you lump summed it.
Hmm. Make it
Um,
easy math.
yeah, if you lump summed it right now, you would have a tenth of a Bitcoin. So it would be worth 800,000 in 10 years, which is that right? 80,000. It'd be worth 80,000 in 10 years. So, that would be fine.
Right. You
Um,
saying that? Okay.
that would be fine, right? But if you only had 100, that would be at $1,000, a year to invest. But if you only had $100 to invest every year, then you would, and let's say you lump summed it at $1,000 right now, it would be worth $8,000 in 10 years. Um, Probably still fine, I guess, but only if you are buying it, only if you're paying one transfer fee, right? If you're transferring it a bunch of times, it might not be viable, right?
And I
And
mean, like, what's the cost? What's the cost of, I mean, I've never paid more than $15.
yeah, right now it's like $1. At the peak of a bull market, it might be 100. At a really dead time, you might sneak one through at 10 for like 10 cents.
Yeah, so
But you,
I guess
oh,
that's my point. Like, there's I don't see a world where that is too big of an obstacle. Yeah, if
well,
you're moving money around, it'll eat
right
your
now,
lunch, but
that's now, Jack. Those are the fees right now. The fees are going to increase as more people are trying to use the blockchain.
I'm not so sure that the amount of users is going to go up a lot.
Oh no, which okay, I agree actually with that with on-chain Bitcoin. I think poor people are always going to use off-chain Bitcoin to avoid the fees. I think that's always and because they're going to have a smaller amount, they're not going to be as concerned about decentralization either, right? But they are going to be concerned about the savings property of Bitcoin, and they'll still get that as long as they don't get rug pulled by their custodian.
Whoever's interjected themselves into the system
Yeah.
that we built to get ourselves away from interjectors.
Yes. Yeah. Yes. Um,
That's what's so frustrating to me about that. It's like yeah. Anyway, I'm not going to go there. That's not the point of the video. We'll,
right.
we'll
Well,
save that for another time. But
that's the point I was trying to make with Moore's law is that Moore's law for Bitcoin is already capped for
so
for on
I
chain
so I guess we were talking about
market cap.
well, I was talking about um, the the network's value.
Yeah.
right? And I think you said more. You mean Metcalf?
Yeah, probably. Yeah, I meant Metcalf. I'm sorry.
That's okay. I was like, wait, do I have this wrong?
Yeah, Metcalf law, the square of the users.
Yeah. So, like I guess when I say that, I was using that in response to security and the amount of people that can store uh, and act as a store the Bitcoin, the entire history and act as a node, right?
Well,
So that, is not what I didn't mean specifically those that are transacting in Bitcoin currently
right.
when I was thinking of that. But although yours is probably a more accurate definition, I just wanted to make sure we were on the same
Well, and
page.
the thing is, people using off-chain Bitcoin perhaps would add to Metcalf's law, though, right? Because they are creating demand for Bitcoin.
Right. But
And
sorry.
we were arguing the market cap of gold versus Bitcoin. So when I first started paying attention to the market cap of gold, it was 12 trillion. And Apple and Microsoft and Nvidia were around 3 trillion while I was paying attention. And well, I guess Apple and Microsoft at least. Nvidia came up to become 3 trillion from less than 1 trillion. But um, and Bitcoin has bounced around between like just under a trillion to maybe 2 trillion um, since I've been paying attention to it. And of course it started at zero and went to, you know, well, for the market cap, probably, at least 1,000 and then 10,000 and 100,000 and a million and 10 million and 100 million and a billion and 10 billion and 100 billion and trillion. Now it's at a trillion. And each of those numbers I said was a 10x, right? Bitcoin has at least 10x about 9 times in 16 years, which is fucking crazy. And it's not gonna, it's not gonna keep doing that, right? But Bitcoin only has one 10x to equal gold, right? It only has to 10x one more time. And it's already 10x at least 9 times in 16 years. So one more 10x is definitely reasonable to me, right? Like I definitely see Bitcoin reaching gold's market cap. Now, the part where I get the part that's kind of more of a thought experiment is once Bitcoin reaches equal to gold's market cap, if Bitcoin becomes $1 million coin, it'll be about equal to gold's current market cap. And at that point, um, I have to think like, okay, um, what happens now? Because I think at that point, this Bitcoin versus gold debate will be happening in the living room of every rich person on the planet. It will be happening in the boardroom of every corporation on the planet. It'll be happening in uh, the vaults of every government on the planet. It'll be happening in everywhere where people are storing value of any way. And every bank, it'll be happening in the boardroom of every bank, which every bank currently owns gold. Every government currently owns gold. There's a few that don't, and they're retarded. But most banks and most governments already hold gold as money, not for jewelry, not for industrial uses. They hold it for money uses, for the monetary uses of gold is why they hold it. And they will most certainly also be holding Bitcoin at that point. That is how Bitcoin is going to get to the market cap, right? It's not going to be from, you know, uh, meme coiners, right? Are not going to get Bitcoin to that market cap. It's going to take the banks and the corporations and the businesses and the business owners and the wealthy individuals. They will push Bitcoin to the market cap of gold. And then something's going to happen. And then what I think is going to happen at that point is either gold's market cap will start to go down, and it could even shrink to 2 trillion, or gold's market cap will, if you are right, Jack, if you are right, where Bitcoin will replace gold, which I think is possible. If that happens, gold's market cap will go down to where the value of gold's market cap is equal to its industrial uses. And I don't know what that would be. Maybe it's 10 trillion. Maybe it's
Sure. I appreciate that. I don't know that it would be that little. I think that it still has for,
but
many
quite a bit of
people. The
industrial.
same, well, but it does have it's got a lot of industrial use, but it also would still be a reasonable investment.
Right. And let's say it holds its whole market cap, right? Let's say gold does hold its full 20 trillion market cap, and then Bitcoin's 20 trillion. Now, if Bitcoin is going to pass gold in market cap with gold holding steady, as you're saying now, if that's the scenario, where's that money going to come from? Because it's not going to come from gold
It's going to be
anymore.
printed. It's going to be
Right.
printed.
So my idea actually is that it's going to come from bonds. Because right now there's 20 trillion gold, but there's like 300 trillion in bonds.
Sure, that makes sense.
And and I think for instance, U.S. government bonds is about 33 trillion, but then you got U.S. Corporations have bonds. It's very hard to find a U.S. corporation that's not in debt. Um, and I invest in ones that have low debt compared to their market cap and income and all that. But almost all of them have some debt. Um, and every or almost every business has debt. Every or almost every government has debt. I would imagine that the banks have some debts, and that's kind of they're kind of debt dealers, is what they are. Um, Government and corporate and personal individual debt. They buy and sell debt. That's what banks usually do. Um, and so I think it is possible for Bitcoin to surpass the market cap of gold by sucking value out of the bond market. And so at that point, I think the value of the bond market would go down, except for the fact that those bonds are created out of thin air by printing, like you said. So as the value of bonds in dollar terms keeps going up forever because of compound interest, because that's just how it is going to, it's how humans are with fiat currency, is we're just going to keep borrowing, and the every time we borrow a dollar, that there's another dollar of bonds somewhere. And, if the government borrows it, or corporation borrows it, or whatever, and as soon as that creates the borrowed money, it also creates the bond at the same time, the yin and the yang. And then they're thinking about creating Bitcoin bonds. In fact, MicroStrategy bonds are already considered to be Bitcoin bonds, and the U.S. government is considering creating Bitcoin bonds. Um, and in
Did
fact,
you mention strategy?
right, yeah, I did
I
mention
mean,
MicroStrategy, and
strategy
gold.
is gonna. They're trying to position themselves to be the main Bitcoin bond creator.
And definitely U.S. government bonds and the U.S. dollar used to be kind of gold bonds. They used to be, right? Um, and gold stopped being used for that purpose, which why I think now from 19 uh I would say, from 1930, or even before that, 1900, you could argue, to 1970, I believe gold was undervalued because it was forced to be undervalued by the fixed price with the dollar. And the U.S. government would consistently print more dollars than we had gold. We got a huge influx of gold in World War One. We got a much bigger influx of gold in World War Two from stealing it from Hitler, and but we still kept printing more dollars, even more dollars than we were gaining physical gold. And to where we, 71, we finally came completely off the gold standard, to where the gold could find its proper price. And from 1970 to 1980, in 10 years, it promptly went up 25x, or 2,500% in 10 years. And it probably became slightly overvalued, because from 1980 to 2000, it went back down to, like, it just went downhill for 20 years, because I think it went uphill too fast in that first 10 years. And now I think kind of people forgot about gold worldwide. I think gold was kind of a forgotten asset for a while because of its poor price action for that 20-year period. That it was a 20-year bear market from 1980 to 2000 for gold. It was a 20-year bear market, and but it's been in a bull market since 2000 until now, 2025, and it's really going parabolic now. Gold is, and I think part of that is because China and Japan and India and Russia are realizing that, and that those countries I mentioned, and basically every country has been investing their money in U.S. government bonds as a savings instead of gold. Like there's a higher, every bank has a higher percentage of U.S. government bonds than it has gold. Almost every bank in the world, I would bet, has that. Almost every government in the world has, as part of their savings, as their sovereign wealth fund or whatever, their assets are going to be higher. They're going to have more government bonds dollar value than they're going to have gold dollar value. But that's changing. These countries are all realizing, wait, gold is probably better. Now, is Bitcoin even better than gold? Probably. But right
Oh, you
now,
just said it. I win.
okay, right. No, and that's why I have more Bitcoin than gold, right? I just think gold has I don't think gold is zero, right?
No,
And I
yeah,
that
gold has a value. There's no. I'm not gonna try and say that there's no point. I mean, for the purposes of the position I took, there's no point in gold. But
think
I don't really agree with that. There is some point in gold.
right now, Bitcoin for the last 16 years and probably for at least the next 10 years, Bitcoin is going to outpace gold. Bitcoin has drastically outpaced gold the last 16 years. And I do agree that Bitcoin will continue to outpace gold, especially in the next 10 years and maybe longer. But like I said, eventually Bitcoin's market cap is going to reach parity with Bitcoin. And I think that's going to be in about 10 or 20 years. That'll happen within 10 or 20 years. I really do think in probably 10 years, probably accurate. And at that point, that's when, like I said, that's when the conversation we're having, you and I are having now, that this conversation is going to happen in 10 years everywhere else.
Sure.
When the market cap of Bitcoin is equal to the market cap of gold, this conversation will happen everywhere,
Mm-hmm.
where
Yeah.
it's only happening between Bitcoiners right now.
Mm-hmm. And
and and
other
and
crypto
old bugs
natives.
like Peter Schiff are just slapping it. Oh, Bitcoin's worthless. I win the debate. Right. That's Peter Schiff's entire argument. Is Bitcoin has no physical use case, therefore Bitcoin is worthless. Therefore, I win the debate. That is beginning and end. I've listened to probably 20 hours of Peter Schiff fucking talking on the internet like an idiot, and he doesn't say anything different from that. And he talks a lot about how the U.S. dollar is being printed into infinity, and he's right about that. He talks a lot about how gold is a good store of value, and he's right about that. But when he says that Bitcoin is worthless, he is wrong. Period. And um, and I think that when this debate happens, right, ultimately the price of gold and the price of Bitcoin is decided by supply and demand. Now we've covered that Bitcoin has a uh, lower supply growth than gold, and eventually that supply growth of Bitcoin will go to zero in 140 years, right? It will go. The supply growth will go to zero. So then the main difference is demand, and um, the the demand for Bitcoin has been increasing faster than the demand for gold has been increasing the previous 16 years. However, the total demand for gold is still higher than the total demand for Bitcoin. And like I said, when the demand for gold and Bitcoin becomes equal, that's when I think it's going to become interesting,
Mm-hmm.
because then the money in the world has to decide: are we putting our money in gold? Or are we putting it in Bitcoin? Or are we putting it in both? Um, and like I said, there's pros and cons, right? For the main pro I see for gold is its ultimate privacy. Like there's companies and not necessarily companies, and U.S. companies probably won't care about that, but I can assure you, many governments will care a lot about that, especially governments that are enemies of the United States. and in fact, they already care about that. Um, and they probably already are transacting gold quite a bit, gold for oil especially. And I'm sure they're trading Bitcoin for gold and Bitcoin for oil. And
Well, we know that they are, at least Russia.
yeah, and we can. I mean, I guess it's the privacy, which is maybe a small thing, right? Because Russia and China and North Korea, they can trade in Bitcoin and kind of give us the finger, and we can see it, but we can't stop it,
Hmm. It's
right?
immutable.
And we can't stop their gold transfers or even see their gold transfers, but we can see their Bitcoin.
Oh, I don't know. I bet you our intelligence agencies are watching
Yeah,
shipments of gold enough to
yes,
buy barrels of oil.
yes, we're probably watching it with their satellites
We
when they
could,
truck.
we could probably go in and intercept both the gold and the oil if we really wanted, but
That's actually probably true. In which case, Bitcoin, that's another point for Bitcoin.
right.
We can probably spot the gold shipment on our satellites, and we can see the truck. We can just drop a bomb on it, or we could just drop a helicopter down and steal it.
Send
Um,
send some special forces or SEALs in
sure,
there and
yeah,
just
we
take it.
could probably do that absolutely. And whereas with Bitcoin, we're not. We're only going to see it after it happens with
Hmm.
Bitcoin,
And by then
right?
it is too late.
Yep, yep, and it'll be too late at that point. Or we'd have to go in. Again, the United States would have to wrench attack North Korea.
Right. Right.
That was the only way they would stop it at that point. And the wrench attack on the gold is the same thing, but at least it would be in transit. Whereas with Bitcoin, you'd have to go all the way to the headquarters to
Hmm.
wrench attack it. Um,
Yeah, where your
so
security will be the tightest, right? So,
at that point, considering that, so like I'm just like, and this is a part I haven't really thought about yet. Right, I hadn't really thought about what does happen when Bitcoin is equal to gold in market cap. Like what happens after that, and would Bitcoin keep going? Right, because another thought is, well, first of all, yes, it will keep going, and the reason I'm confident in that statement is because the gold market cap keeps going, right? Like I said, gold has gone from 12 trillion to 20 trillion just in the past couple of years, and it's probably going to, in 10 years, when it's in 10 years, gold's market cap is not going to be 20 trillion. In 10 years, gold market cap is probably going to be 40, 50 trillion, 100 trillion. I wouldn't doubt. Why not? I almost for sure it's
yeah,
going to
with
be
the amount of money, I mean, the austerity would be the why not. I mean, if there was actually some austerity that took place and people reset the debt system, maybe. I
right.
mean, it's possible, right? But
That would require people getting less money for Social Security.
hmm
It would require people getting less money
oh,
for
it would require a lot of pain.
require less money for the military, and it require less money for interest on the debt.
Hmm.
And none of those four things are going to happen.
Right. I agree.
For it's just not going to happen. Neither there is no Democrat and no Republican saying, you know what, we're going to cut Social Security in half. You know what, we're going to cut Medicare in half. You know what, we're going to cut the military in half. And maybe the Democrats say they're going to cut the military in half, but they don't do it. And the Republicans certainly are not going to cut the military in half. And the Republicans might say they're going to cut Medicare in half, but they don't do it. The Republicans might say they're going to cut Social Security in half, but they don't do it. Both parties might say they're going to cut the you
But
know
they're all going to print.
interest on the debt in half, but they don't do it. They all fucking
They're going to print. It's going
right.
to, and that's
That,
why, that's why, anyways, that's getting into another subject, but that's another
right. That's
reason
why. And,
why I see Bitcoin as a way out of it. But
right, and that's why. And gold has been a way out of it this whole time. I mean, gold, and that's my whole point is that Bitcoin is just a new version of gold. Gold is still gold. Gold is still viable, right? From 1970 till now, it's been 55 years. Gold's gone from $35 an ounce to $3,500 an ounce. Gold has 100x in 55 years. That's incredible. That's 100x is 10x is 1,000%. So 100x is 10,000%, right? And I might be missing 100% here or there, but about 10,000% increase. Like that's pretty sick, bro.
mhm.
Like, I mean, 100, it's gone a thousand x, right? So maybe I save up, you know, our $10,000 amount. Well, 1,000x that now it's 10 million. Like that's pretty good, right? And gold did that in 55 years, right? If I'm retiring 55 years from now, which I'm a little old for that, I would like to retire a little bit earlier. But if I was 18 years old, I could consider 55 years to be a reasonable time from 18 to retirement. Then I would be, if I was 65 plus 8, 73. 73 is a reasonable retirement age. Again, a little bit late. I want to do it a little bit sooner, but 73 is a reasonable retirement age, meaning you would have 55 years. And if gold went up a thousand X in the next, or I'm sorry, 100X. Is it 100? 35 to 3,500 is yeah, it's 100X. I'm sorry, not 1,000X. So it would turn a $10,000 into a million. It's okay. Now that I'm looking at it that way, it's not that great. Gold is slow. I'll give it that. Gold is slow. But also, I think part of the reason gold's been slow is it's been ignored for 20 years. In fact, I think it's been ignored for 45 years since 1980. It's been kind of ignored because it had the downturn from 1980 to 2000. And it's been ignored from 2000 until 2025. It's been mostly ignored until about 2 or 3 years ago, really COVID. I would say since 2020. And even then, gold price didn't really shoot up fast. It kind of consolidated for a while and then started shooting up in probably 2022. Um, but
But yeah,
um,
I think we've been talking for a while. I think we're gonna have to go ahead and wrap up. But you know, in my I guess for me, my final thought is that uh, there is a place for gold
yeah,
when it comes to the world of investing as well as the world of industry and for that matter the world of fashion. Uh, when it comes to my personal belief in investing, I don't see a need for it uh, in my portfolio as it is. Now, again, not that there isn't a use for it or even an argument for it to be there, uh, but I'm in a more growth-oriented frame of mind for my portfolio, and I'm not as trying to be, as capital, I guess, protective as I am trying to take on more risk. So in that regard, I guess I look at Bitcoin as a similar asset with higher risk and higher reward. So I prefer that one. But now let's say for example that I achieve my goal of growth beyond my wildest dreams. At that point in time, I would be looking for a capital preservation. You know,
strategy. Yeah.
so, and at that point in time, I think, yeah, I probably look at gold. I might because just because you don't like Bitcoin's volatile, right? All crypto's volatile. Um, volta vitality, I'm sorry, volatility is vitality, and there's a lot of money that can be made there. Uh, but when you're talking about retirement and trying to preserve capital, you don't really want the volatility. You
But if you
know?
want the growth, you are going to get volatility.
Yeah,
I agree. I agree with everything you just said. And that, I guess that was, can I throw in my
yeah, yeah.
final thought?
Please, your final thought.
Okay. My final thought is when Bitcoin becomes just as big as gold, why would Bitcoin also not slow down to the slow pace that gold has? Why would Bitcoin keep going faster? Is my question to you.
I'm not sure that it would.
Right.
I'm not
I
sure
agree.
that it would. But
But holding now
between now and then, right?
is a good hold.
Right. That's I
I,
guess.
I, I 100% agree. I think that's probably the most likely scenario is that as Bitcoin grows the size of gold, it might start slowing down. It won't stop, and gold's not stopped either. Gold's still growing too. It's just the pace of growth of Bitcoin will slow down.
Hmm.
And the reason and again, I hold a very small amount of gold compared to the amount of Bitcoin I hold, but it is somewhat significant. The amount of gold I hold is definitely more than 1%. It's maybe more like 10% of my Bitcoin holdings. And um and I'm buying more gold just because I want less volatility than I currently have. And my portfolio is like yours. It's set up for maximum growth,
Hmm.
maximum vitality. And along with that comes maximum volatility.
Volatility. Yeah. So the.
I'm trying to throw a little gold in there just so I don't barf all over myself. And I barf all over myself frequently. And what I mean by that is the volatility gets to me and I sell some asset merely because of the volatility, which is bad,
Mm-hmm.
right? I want to be selling for two things. I want to be selling to take profit at a high point, or well, three things. Or I want to be selling to buy a house like I did, or I want to be selling to what's the third reason to sell?
Coke and hookers.
Lost thought. Anyway, I don't want to sell because the price went down.
Right.
That's that's the worst reason to sell,
Hmm.
especially when the fundamentals are the same. Oh, the other reason is if the fundamentals change,
Right. That makes
where
sense.
I no longer believe in the asset, then I would sell it at any price because I don't believe in it anymore, and move on to use that capital as an opportunity cost. Use that capital for a different asset that I do believe in
Sure.
more. Uh, but yeah, I think I agree. I think I'm gonna give Bitcoin the win here because especially if you're in a growth mindset, which both you and I are at this point in our lives. Um, if you're trying to grow, if you're trying to grow your wealth, Bitcoin's your asset, not gold.
Yeah. If you want to
And if
protect it, maybe that goes the other way around, or you have
yeah, if
a
you're trying
diversification.
looking for capital preservation, gold is your asset right now. But considering both Jack and I are in the growth phase of our lives and are kind of middle age, we're probably both better off in Bitcoin. And I may want to revisit my strategy of currently DCAing 33% Bitcoin, 30% gold, 33% stocks. I may want to reduce my gold percentage. I think I have it high up there right now, as high as my stocks and my Bitcoin, again to kind of balance out my holdings more. Because like I said, my actual total gold holdings are less than 10% of my Bitcoin holdings,
Sure.
and that's a roller coaster ride, bro. Like I'm holding gold to it's a little bit of anti motion sickness for me is
Sure.
all it is. That's all it is. It's just a little bit of little anchor for my little heart. That's it.
Okay. All right. Well, with that, we'll go ahead and wrap it up. I guess if you guys take
Yeah.
anything from today's video, take if you're gonna hold volatile assets, you're gonna barf all over yourself. That's really what we want you to take away from today's video.
Uh, you have to figure out what your threshold. Some people can go on pretty wild roller coasters and be fine.
Hmm.
Other people look at a even think about riding a roller coaster and they barf. Right.
So it's all none of this is financial advice. We don't know your financial situation. Hell, we barely know ours. So don't consider this financial advice. None of it
Right.
is.
No, this
But
is just us having
just
a discussion
it's
that everyone else is going to have in 10 or 20 years.
yeah, it's us discussing our opinions and moves that we like to make and why we like to make them. So if you guys want to learn more about our opinions, what we think about, what we like to do with our investments, feel free to go ahead and subscribe. Click the like button if you want to get more content like ours, and put on the bell notification so the next time we go live, you can catch us while we're actually live. Anyways, and so
Yeah, and thanks
thanks.
for talking about this, Jack. It was really fun.
Yeah, it was great conversation, John. I can't wait until we do another one next time. And